Anthony Grasso here, bringing you financial news that you can use. In this series of videos, I'm going to look at stocks to invest in to recession-proof your portfolio. In this particular video, I'm going to do a stock analysis on NortonLifeLock. Now, is NortonLifeLock worth investing in right now? And basically, is cybersecurity industry recession-proof? Well, let's find out together. I'm going to go over a summary of the company, its product offerings, recent headline news, financials, analyst projections, and I'm going to give it my buy, hold, or sell recommendation for both your short-term and long-term growth investors out there. And as always, folks, don't forget to smash that like button down below. Definitely helps. And consider subscribing. Hit that notification bell to like your daily stock reviews and recommendations from an unbiased source. So let's get right into it. As always, this video is brought to you by Webull, an online brokerage trading platform where you can buy stocks, options, ETFs, and cryptocurrencies. If you sign up today and deposit any amount, you can get up to 12 free stocks by using my referral link in the description down below. All right, so NortonLifeLock provides cyber safety solutions for consumers in the United States, Canada, Latin America, Europe, the Middle East, Africa, and the Asia Pacific and Japan. It offers Norton 360, which is an integrated platform that provides extensive cyber safety coverage, and a subscription service providing protection for PCs, Macs, and mobile devices against malware, viruses, adware, ransomware, and other online threats on various platforms. And Norton and LifeLock identity theft protection solution that offers monitoring, alerts, restoration services to its customers. The company also provides Norton Secure VPN solution, which enhances security and online privacy by providing an encrypted data tunnel. Now, Privacy Monitor Assistant, which is an on-demand white glove service where agents help members delete personal information from data brokers online. Now, it also has the Home Title Protect product that detects fraud and notifies members, and the Avira Security, which is a consumer-focused portfolio of cybersecurity and privacy solutions. It also offers dark web monitoring, a product which looks for personal information of its Norton 360 members on the dark web, and social media monitoring solution that helps keep customers' social media accounts safer by monitoring them for account takeovers, risky activity, and inappropriate content. Now, the company also provides anti-track product, which helps to keep personal information and browsing activity private by blocking trackers and disguising digital fingerprints online. And it has the online reputation management solution that manages online search results, personal branding, and digital privacy. It markets and sells its products and related services through retailers, telecom service providers, hardware original equipment manufacturers, and employee benefit providers, as well as e-commerce platform. Now, the company was formerly known as the Symantec Corporation and changed its name to NortonLifeLock in November 2019. So let's go ahead and look at some of the news of the company right now. So the UK Competition and Markets Authority, which we'll call the CMA, has provisionally greenlighted the proposed $8.1 billion merger of cybersecurity companies NortonLifeLock and Avast, with Microsoft emerging as the unlikely ally as the two companies seek to push the deal over the line. Now, the CMA said it is now concluded that the merger does not raise competition concerns in the UK, and that there are various alternative free and premium cybersecurity software products on the market right now. These include the likes of McAfee, which in fact was recently acquired by an investor, a consortium, for $14 billion, and the mighty Microsoft, which the CMA said holds a unique position in the market as the owner of the Windows operating system. So this is exactly great news for NortonLifeLock, and I do believe that if this merger goes through, it's definitely going to be a good thing for NortonLifeLock. So now let's go look at some of the fundamentals of the company right now. So the stock is currently trading at $23.95 a share right now, with a market capitalization of about $13.7 billion. Now, the company is projected to have $2.88 billion of revenue by March of 2023, with $1.006 billion in earnings. Now, the revenues are projected to increase over the next few years to around $3.16 billion by March of 2025. Earnings are forecast to grow about 7.51% per year, and the earnings have grown 20.5% per year over the past 5 years. Now let's go ahead and look at some of the analysis real quick. Let's do a little deep dive. Let's look at the valuation. Now, because NortonLifeLock is in the software industry and has positive earnings, the price to earnings growth and the price to earnings ratio are the most appropriate valuation measures. The price to sales ratio is not as meaningful as the PE or the PEG ratios due to the company's positive earnings. Therefore, NortonLifeLock seems valued at a discount right now with a PEG value of 2.09 times, one of the lowest in the software industry. Although their price earnings ratio is 16.91 times, that is below the industry median of 32 times. Now let's look at the price to earnings versus the fair ratio. Now the fair price of NortonLifeLock when looking at its future cash flows, for this estimate, we're going to use the discounted cash flow model. Now, NortonLifeLock seems like a good value based on its price to earnings ratio of only 16 times compared to the estimated fair price earnings ratio of 31 times, and that's within the industry median. Now, let's go ahead and look at the profitability of NortonLifeLock. Based on its gross margin, operating margin, and net margin, NortonLifeLock converts a larger percentage of its revenues to profits than most of the other companies in the software industry. Furthermore, the company is profitable with an operating margin of 34.82%. Now, let's look at the dividends here. Now, NortonLifeLock pays an annual dividend of 50 cents, and at its current price yields 2.05%, a level that is in line with both the software industry average and the S&P 500. Additionally, the company is in the minority as a few others in this industry even pay a dividend. Now we want to look at the growth of NortonLifeLock. Earnings growth at NortonLifeLock outpaced revenue growth over the trailing 12 months. This is a trend that is not sustainable if profits are to continue to grow at this rate. However, this result was better than that of the average company in the software industry. Now let's look at the financial strength of NortonLifeLock. Although it reduced its percentage of debt used in its capital structure this year, it has a debt to total capital ratio of 109% and is among one of the most highly leveraged companies in the software industry. Though the company should be able to comfortably repay its debt, though, given that its interest coverage ratio is 8.77 times. So what do the analysts say specifically regarding NortonLifeLock? Now, the analyst consensus is a moderate buy, and the average price target over the next 12 months for NortonLifeLock is $29 a share. Let's go over a few of the analyst reports real quick. So the Street Ratings has a hold recommendation on NortonLifeLock. The primary factors that have impacted their rating are mixed, some indicating strength, some showing weaknesses, with little evidence to justify the expectation of either a positive or negative performance for this stock relative to most other stocks that they review. Now, the company's strengths can be seen in multiple of areas, such as a solid stock price performance, growth in earnings per share, an increase in net income. However, as a counter to these strengths, we find that they feel that the company cash flow from its operations has been weak overall. And then the Ford Equity Research Report right here has a hold recommendation as well. That's the result of their systematic analysis of the three basic characteristics that the Ford Equity Research Report looks at. They look at earnings strength, relative valuation, and recent stock price movements. Now, the company has generated a negative trend in earnings per share over the past 5 quarters. Because the company lacks sufficient analyst estimate data, they place a greater weight on the historical earnings per share trend as the measure of earnings strength. Based on the operating earnings yield, the company is undervalued when compared to all the other companies that they cover. Share price changes over the past year indicates that NortonLifeLock will perform in line with the market over the near term. And finally, we're just going to briefly go over the CFRA report right here. They also have a hold recommendation as well. The company has a well-known and reputable consumer brand, a growing portfolio of products with new use cases, and opportunities to expand internationally. NortonLifeLock's new products continue to resonate with consumers, as seen through their higher wallet share. Retention rates remain high, and the ARPU is rising. $8.90 in the quarter four versus $8.80 in quarter four 2021. It continues to expand into new areas, identity and privacy, while strengthening existing ones with the feature enhancements and incremental solutions. Think of social media and the dark web monitoring. Now, internationally, Reach is also showing progress as it launched products in new regions. However, they are mindful that NortonLifeLock's end market is low growth and ongoing inflation may impact consumer spending on security software. Now, I disagree with that sentiment. How do you? Because of growing inflation, I have a bunch of computer systems right here that I need protected at all times. So I use NortonLifeLock. So let's bring it back over here. So based on all that information, am I a buy, hold, or sell recommendation on NortonLifeLock? Here are my thoughts. First off, one should really ask the following question: is cybersecurity industry recession proof? Now, since the pandemic hit, companies around the world have been focusing on digital transformation even more so than they were. You know, because all through the digital transformation was already picking up earlier than the start of the pandemic. This accelerated enterprises' adoption of digital solutions to stay relevant in a highly competitive business environment. Now, the rapid adoption of digital technologies has enabled the implementation of newer and disruptive business models and processes. But it also necessitated the need for enhanced cybersecurity solutions as cyber attacks and security breaches become prevalent with digitization. Now, with the surge in investments towards digital transformation, cybersecurity companies are expected to play a significant role in helping enterprises manage their digital risk. Given its highly critical need, expenditure on digital security has become indispensable, irrespective of the need to control cost amid an economic downturn. This makes cybersecurity industry almost recession-proof. Now, given the growth prospects of the industry with this speculated increase in cyber attacks from Russia amid increasing sanctions on the nation and its recession-proof nature, NortonLifeLock looks well positioned to capitalize on this specifically. As enterprises continue to shore up their digital infrastructure, they become highly vulnerable to cyber attacks and security breaches. On top of that, NortonLifeLock has strong fundamentals and is significantly undervalued right now. So based on all of that, I am a buy recommendation on NortonLifeLock with a 12-month price target of $33 a share at the low end. I consider the company undervalued with an acceptable track record with a lot of promising prospects. Risks to my recommendation, though, and target price include weakening demand for cybersecurity solutions as consumers spend less time digitally, which I don't agree with that, but that's a possibility. Stronger peer offerings and competitor OEM partnerships with PC and mobile device manufacturers. Even with the OEM partnerships, I forego what was on my computer and I picked my cybersecurity program specifically for my needs. So there you have it, folks. And as always, don't forget to smash that like button down below. Definitely helps. And consider subscribing. Hit that notification bell if you'd like to hear daily stock reviews and recommendations from an unbiased source. Until the next stock update video later today, folks. Ciao.